it to you first. This was a disappointment almost in every way other than the wage gains.
The wage gains. You know, the wage gains, even though it's good, it's not that it's that robust. I think that it would make a difference. So as you really start to look at these numbers that Peter has just reported, this does not look to be a very positive report. Not only from the 160,000 jobs that were created, but I'm very concerned to see the labor force participation rate tick back down and to see that 360,000 people have decided to kind of give up on the workforce. That's certainly concerning. I'm not surprised by the lack of retail jobs, though I didn't expect it to be a negative number. I think it says, you know, just what we were talking about. The job creation is in the professional and business service sector, and then certainly the healthcare field, but only 1,000 jobs in construction. That's not good for our economy. Manufacturing being at 4,000 did tick up, you know, from where it's been, but I don't expect to see big numbers from there. So overall, not the best jobs report today.
Mike Murphy, we see a little bit of picking up in the selling here with a 71-point loss on the Dow futures, but again, because of that ADP report earlier this week, a disappointment on private sector job creation, at least as we were talking about. At least some of this seemed to be factored in. But this is a disappointment, a big disappointment.
Definitely a disappointment. Let's watch how the market reacts to this. So right now you're seeing trading, a lot of it computerized based on the headline number that came out weaker than expected. You know, look at the financial sector. This will tell you, or a lot of people will deduce, that therefore the Fed, being data dependent, watching this come out, will not raise rates anytime soon. So that could all of a sudden hit the financial sector here. So let's see how it reacts, but I would expect after the market digests this for the market to lift up on this, saying that, hey, no Fed rate hike equaling good for the stock market.
The average going into today, not factoring in these revisions, for the first 3 months, the average payroll growth was 209,000. So this is a pretty significant slowdown from what we were seeing in terms of job ads.
I think now we know it's December. I just don't see a June job hike happening. You've got global slowdown. Now it's clear that things might be slowing down here a little bit. Why would you change this trajectory right now?
And talk about going into a presidential election year. How does that weigh on businesses willing to add jobs or a lack of willingness?
Well, I think it's really interesting. If you look at kind of past election years, how there has been a lot of turmoil going into certainly 2008, but also going into when George Bush was first elected. There were also concerns in the economy as well at that time when the tech bubble blew up. I think in terms of policy, I think that certainly I think the Fed is more likely to wait until later, but I think there's this growing consensus that we can't be over-reliant on monetary policy to do all the work. That, to Steve's point, we do need to look at the regulatory and tax side of things as well. And I think it's really interesting that right now the Obama Labor Department is really thinking about raising the minimum requirements for overtime pay. Mm-hmm. So when we think about when would be the best time for these types of regulations, and now is certainly, in my opinion, not a great time for that.
Good point.
So I think this may actually cause some rethinking, I think, within the Obama administration as well.
Steve Moore, a disappointment, this jobs report. 160,000 jobs, that was lower than expected. You have wages that are growing at 2.5%, but that drop in the labor participation rate, again, people are not part of this job market. There were 360,000 people who left the workforce. What do you make of this? Like, put it in perspective.
So, okay, we were, for the last 2 years or so, Dagan, we've been averaging between 200 and 250,000 jobs. With the revisions, we got 150,000 jobs. So this gets to the point I made at the outset of this. Is the economy growing at 2 or 1%? I think this is an indication the economy is growing a lot slower than we had hoped. I think we're at the 1% growth range. That's terrible. That's miserable. It means, you can't get much growth of wages or anything if the economy is only growing at 1%. I think it's a distress signal, quite frankly, and I think we do, as Steve Corstad said, we need some interventions now that are going to juice growth. Right. We need a tax policy. We need some regulatory reform. And meanwhile, you got Hillary Clinton running around the country saying she's going to destroy coal jobs. The question I guess I would ask if the Obama administration were in, where's the growth going to come from? What's the juice that's going to provide the growth so we get back? We shouldn't have 250,000 jobs. We should have 500,000 jobs a month, and we got 150.
Steve Cortez,
Steve, also to your point, you know, the fact that we're hoping for 2% growth is pathetic.
Exactly.
That kind of mediocrity
Exactly.
is beneath what is expected as an American. We should
That's
have
right.
3 and 4% growth, not 2%
We had 4%.
at best.
Steve, we had 4%
Which is what
growth.
we're
We averaged
hoping
6,
for
7
now.
years under Reagan. So you're exactly right.
Right.
But
No,
there's-
and we can get there again. Look, the American
Yep.
people are dynamic and innovative and hustling. The problem is Washington, D.C. It's regulation and it's taxes. We will get past this, though, after November.
Well,